We got the numbers, 431,000, so a little bit lower than estimated here versus the 490,000 that economists were looking for. 431,000, an unemployment rate, though, ticking down to 3.6%. Average hourly earnings actually rising a little bit better than estimated, 5.6% on a year-over-year basis. And that labor force participation rate I was mentioning coming in bang in line at 62.4%. So just reiterating these numbers here, 431,000, the change in non-farm payrolls, 426,000 of those in private, 38,000 manufacturing payrolls, an unemployment rate. Remember, just as we always remind you folks, non-farm payrolls, that data coming to us from companies, whereas the unemployment rate is from a survey. So that at 3.6%, ticking down, average hourly earnings up by 5.6%. All of this said, we also see some upward revisions in the prior month. In other words, the numbers I'm giving you are March. In February, the initial read was for an addition of jobs of 678,000. Now the Labor Department is telling us the addition was actually 750,000. So 750,000 jobs had been added in February, and now 431,000 jobs added in March. Could we see further upward revisions? We shall see. I'm also noticing that average hourly earnings, which had initially been recorded as flat in February, now flat on a month-over-month basis. Now we're seeing a tick up of 0.1%. So those are some of the highlights that I am watching for. I'm going to take a look inside the release as well to get more details. What is standing out to you here initially this morning, Saz?
My first instinct, Julian, and we'll flesh this out with our guests throughout this morning, but even though it missed on the headline, do not discount those strong upward revisions to jobs, and perhaps that does put the Fed in play for a 50 basis point rate hike at its next meeting. Again, that's just my quick instant analysis. Two things I am watching, though, from inside this report. One, 10% of unemployed persons teleworked because of the coronavirus pandemic, down from 13% in the prior month. It continues to fascinate me, Julie, that so many folks say they still want to work in this hybrid work environment, but in many respects, they're going back to the office in some capacity. And I just anecdotally, I see it just traveling around New York City. The trains seem fuller, the restaurants seem fuller. People are back out and about, and perhaps now it becomes a little clearer why you see a stock like Zoom trading so low and where it is, because people are in fact going back to the office. Also worth noting, 112,000 jobs added in the leisure and hospitality space. It looks like just from that number, a lot of the hotels, a lot of the travel companies are gearing up for a pretty strong summer season of travel.
Yeah, definitely. That number from leisure and hospitality stood out to me as well, although the bulk of that is in restaurants, food services, and drinking places, adding 61,000 workers, accommodation, only 25,000 workers. And by the way, that leisure and hospitality sector is still 1.5 million jobs lower than it was prior to the pandemic.